Good morning, everyone. Welcome at today's webinar, Buying a Home in the Netherlands. My name is Rick. I'm a buying manager at Expat Housing Network. I'm Dutch. I live in the city center of Rotterdam. And just like you guys, I have some experiences abroad. For my studies, I spent some time in South Africa and Colombia. So at EHM, we think greatness is achieved in the agency of others. So let me shortly introduce my team. One of them is here. Giovanna, maybe you would like to introduce yourself.
Hi everyone, good morning. Hi Rick. Yes, I'm Giovanna. I am from Brazil. I cover the area of the south area of the Netherlands, so Eindhoven, Maastricht area, Den Bosch as well. So yeah, I'm also a buying agent. And just so you know, you have the possibility of ask all your questions during the webinar. You can put them in the chat. You can see the chat, or you can see the Q&A. I will answer during the presentation, and if there are more questions or specific questions for the mortgage advisor, then it will be answered them at the end of the presentation. So you can put them all in the chat or in the Q&A, and then we will answer them for you.
Thank you. I think the Q&A is most convenient, so it's
Yes,
we can
indeed.
see how what the answers are. But yes, if you have any questions during the webinar, feel free to put them over there. The rest of the team, Joanna, she's joined by Larissa, also from Brazil and living in Eindhoven as well. And then we also have our Amsterdam team, so Matt, Ludo, and Amy. And as you can see, the team comes from different countries, speak a lot of languages, so probably also yours. All right, a short introduction about EHN. First of all, we are no traditional real estate agents. We support with buying, renting, I have to say also with letting, and as of now also with selling. But of course, today's webinar is focused on buying. But if you're interested in any of the other services, feel free to have a look at our website as well. I mentioned we're no traditional real estate agents. One of the biggest differences is that we charge a percentage over the appraisal value as our fee. Whereas a lot of traditional real estate agents, they charge a percentage over the purchase price. We think that, or we do not want to give our clients the feeling that we just want to offer the highest price so we can earn the most. So we do not benefit from you paying anything extra. That is, yeah, basically it. And as you could see, our team were either expats ourselves or we've lived in different countries. So we definitely know what it's like to settle in a new country. What is the added value of EHN? First of all, selling agents take our offers more seriously. In the cities that we work, we have quite an extended network, I would say. So probably agents have worked with us before. They know we did our checks on our clients. And it is the case that selling agents prefer to work with buying agents. And because of that, we can also book viewings when for you guys it's sometimes no longer possible. Selling agents often have special blocks for buying agents. So it could be that if you make a phone call, they say, well, sorry, it's full. And if we call, we can still secure a spot. For those of you who already viewed a property, you might have seen that you received a list of documents. And unfortunately, all of them are in Dutch. And we will make sure that you understand everything, what you should know. Then the market value, maybe the most important factor in the buying process. We will help you to define the market value through market data. We'll talk about a bit more into detail about this topic later on in the webinar. We will also inform you about all the rules, regulations, and restrictions related to the property. Also very important to know that before submitting an offer, before buying. Things you can think of are self-occupancy obligations, ground lease, all those kind of things. And then last but not least, we'll make sure you don't make the same mistakes as we made. We've been doing this for quite some time now. I think with the team, we've seen it all. So we will make sure that you experience a smooth buying process. I'm not alone here today. I'm joined by not my colleague, but by Robin, the mortgage advisor. So Robin, if you can introduce yourself and your team as well, would be great.
Of course. Thanks, Rick. Thanks for the introduction. Thanks for hosting as well. And sure, we're not colleagues, that's true, but it kind of feels like it too. But it's no, we very much enjoy working together. Let me introduce our team. We're Mr. Mortgage. So we're not presuming to call ourselves individually Mr. Mortgage, but it's just the company name, of course. And I'm the second one from the right. I won't challenge you to pronounce my last name. It's quite Dutch. Uijtdehaage. and I'm one of the financial specialists at Mr. Mortgage. I'm joined by Özkan and Cesar as are my fellow financial advisors. And recently, we are proud to announce that we have another colleague joining our team, Lisa. She will undoubtedly be shown in the next picture, the picture of the next webinar as well. And then, of course, where would we be without Egla, our growth marketeer, basically getting us out there and let you guys know that we exist and we can help you with your finances. And that's basically also what we do. Our goal is in the end to help you understand and get insight in what your possibilities are. Each of us have experience moving from one place to the other, whether it's from abroad to the Netherlands or the other way around, and then figuring out what your way through the kind of a maze of paperwork you have to go through to get things done, primarily in this case, financing, of course, because you have to know your way around. Now, I don't want to make it too daunting because it doesn't have to be, but it is good to know your way around. And that's also why we started Mr. Mortgage, to help you do that as well. So basically where we start is always when you consider moving to a new property, whether that's renting, buying, or whatever your plan is, we'll always first set up a calculation and an analysis of your financial situation to check, well, what makes the most sense? Does it make the most sense to buy right now, or does it make more sense to wait a bit and keep on renting for the time being? So even though we're called Mr. Mortgage, we won't push you to do that. We always want to be sure that you get the best available option for you out there that makes sense now, but also definitely in the future. For that, we work with a variety of banks, basically all available banks in the Netherlands. And we're independent from all of these banks, which allows us to really get the best option for you specifically, and make sure that, again, as mentioned, it makes sense now, but also in the future. This is what we do throughout the whole house hunting process, whether you're buying a new home, whether it's a new build or an existing home, if it's your first house that you buy, or if it's your second, third, fourth, fifth that you want to move into, but also if you, for instance, want to buy a house to invest in. So if you want to rent out the house. Now, there's a couple of things to know, of course, about this. It's definitely something we can dive into more specifically later on. When you want to rent out your house, but also maybe you already have the house and you want to increase the mortgage because you want to do a renovation of the property and make it even more your own. Or if something changes in your lifestyle, in your life, in your income, then we can see if we have to change the mortgage, or if something happens and you might be faced with a divorce, or the other way around, that somebody comes to live with you and you want to have them on the mortgage as well. So basically anything regarding your mortgage or your housing will be there to help you understand your finances and to guide you through the whole process. So that's what we do. And that's our team. So I think, Rick, take it away.
Yes, thank you. That was a great introduction. Let's move on. So today's goal is to add value to you. We believe in sharing information freely. Most of you are researching or in the early stage of the process. So I hope you will learn something today. The NHG, Robin,
Yes.
Can you explain what the NHG is?
Of course. NHG, well, if it's a Dutch abbreviation, though, so that's why it doesn't make sense that it says National Mortgage Guarantee, but that's the free translation. Now, what it is, it's kind of an insurance arrangement. I kind of usually call it a kind of a doomsday insurance, so let me explain why. So when you buy a property, let's say for 400,000 euros, and everything is going well, you have a job and everything goes splendidly. But then the first thing happens, and the first thing is that you do not have the job anymore, whether you're laid off because of financial reasons of the company, for instance, or you get disabled, so you cannot do the same job anymore, and your income drops or falls away completely. That's the first issue, of course, because then you might have struggle paying the mortgage. If that happens, first off, just check in with the bank, or if you have any payment issues, just check in with the bank immediately, explain the situation. 9 out of 10 times, they just want to help you as well, because what is good to know, banks like money, and they also like your money coming in, so they rather help you paying it for a longer term than to cancel your mortgage altogether. Now, that being said, if you have issues, call the bank. Now, if you have so much issues that you might have to sell the house, that's not what you want, of course, but you can, if you cannot afford the mortgage anymore, you might have to. So that's the first thing. Now, why I call it a doomsday insurance is because basically if you sell the house, you bought it for 400,000 euros, couple of years down the line, the remaining mortgage is 390, and you sell it for 4, then you have 10,000 euros profit, right? So nothing is going on specifically there. You can sell the house, mortgage repaid. When you sell the house, your mortgage is always repaid without any penalty. I noticed that was one of the questions. So yes, you can always sell your house, even if you have a mortgage on it, no penalty, nothing wrong. But if something else happens, and that's the value of your property dropped, then you might have an issue. So you don't have a job anymore, or don't have the required income anymore. And then suddenly you have to sell your house because you cannot afford the mortgage anymore. And then the value of the property is lower than the outstanding debt. So you have a debt for 390, but the value is only 350, for instance. You have 40,000 euros remaining debt, and you don't have a job, and you don't have a house. Now, that's what I mean by the doomsday situations, because that's not what you want, of course. This is where National Mortgage Guarantee steps in. This is what the insurance arrangement is. If this happens, losing your job, have to sell the house, and you have a remaining debt, National Mortgage Guarantee, NHG, will then pay that remaining debt for you. Very nice that they do this, but an insurance being an insurance, they will charge you a premium for that. Not a monthly, not a yearly, but a one-time premium of 0.6%. Now, you don't have to memorize those specific numbers, of course, but that's the one-time buy-in, if you will, in this insurance arrangement. This will be stated later on in an overview as well. Now, then you see 2 numbers here, 2022 and 2023. Obviously, we're in 2023 right now, and this is the cap. This is the maximum, so this is the limit under which you can get the National Mortgage Guarantee. This limit means you can buy a property that has a value or purchase price of maximum 405,000 euros this year to be able to include the National Mortgage Guarantee in your mortgage. You don't have to do anything additional for that. We'll take care of that with the bank. So that's not more work or anything. But 405,000 euros, then you can include this insurance arrangement. Sounds nice. The situation that you really need it is very slim, because we don't expect the property values to decrease so rapidly. So we don't expect that to be an issue. So why would you then need it? The interest rate. If you secure a mortgage and you have NHG in there as well, then the interest rates are approximately 0.5% lower. So that really does help you along to get, for one, a higher mortgage capacity, so you can borrow more with a lower interest rate, but also your monthly payments will be lower. So it can be definitely very interesting to include that here. So that's National Mortgage Guarantee. Regularly we get some questions here about this, so let me answer them right away. If you buy a property for 410,000 euros, and you'll say, okay, no, but I'll put in the 5,000 euros myself, then NHG does not apply. The purchase price or the value has to be maximum 405,000 euros, or it doesn't apply at all. So that's good to know. Now we're in 2023 now, but we're already at the end of 2023. Now I expect within a couple of weeks, the new limit for this NHG arrangement of 2024 will be announced. The expectation is that it will increase to around 440,000 euros, so 440. So that means then you can buy a more expensive house with this insurance arrangement, therefore a lower interest rate. In short, National Mortgage Guarantee insurance arrangement where you get a lower interest rate, but with a cap of 405,000 euros purchase price this year.
All right, thank you. Yeah, I think it's great that it already answers some of the questions, but then the transfer tax. So good to know, typically when you buy a property, you would have to pay transfer tax. If you're going to use the property as your long-term main residence, the transfer tax is 2%. If you're buying a property as an investment or a second property, the transfer tax is 10.4%. So that's quite a big difference, I would say. However, we have a rule or exemption, and that is if you buy your first property in the Netherlands, you are below the age of 35, so up to 34, and the purchase price is below 440,000 euros, you're exempt from paying the transfer tax. So on a property of, let's say, 400,000 euros, this will save you 8,000 euros. So another benefit if you're looking in this price range, since you can save up quite some money or savings on the transfer tax. renting versus buying. I mentioned today's webinar, it's focused on buying, but maybe it's good to compare the two of them. So why should you rent? Well, there's a few benefits for renting. And the first one is flexibility, right? Depends on your contract. Some contracts have a minimum stay, like for example, 12 months. But what you'll see a lot is a model B contract with a max of 2 years and 1 month of notice. So if you're planning to leave the country or move to a different city, of course, it can be really nice to have this flexibility. There's no taxes or maintenance. Of course, this is paid by the landlord. Taxes you can think of in the Netherlands might be a little bit different than in your home country, like water board, property tax, sewage tax, all those kind of things are paid by the landlord. And there's no down payment required. Well, the only thing you should keep in mind is that probably you do need to pay a deposit equal to 2 months of rent. But other than that, no down payment. And as I mentioned, when you own a property, you do have to pay taxes. So that is one of the disadvantages. Also, the maintenance, of course, depends on whether you buy an apartment or a house. With an apartment, most of it is covered by the Homeowners Association, VVE, as we call it in Dutch. But you do have to pay service fees for it. And it makes it a little bit more difficult to move, right? You have to sell your property, find a new property. So that process takes a bit more time than looking for a new rental place. But if you're still interested in buying a property, what are the benefits of owning a property? Well, the first one is stability, the opposite of flexibility. But as I mentioned, most rental contracts will only allow you to stay for 2 years. Or if you own a property, luckily that is not the case. Maybe the biggest advantage is, of course, that you build up equity, right? So when you pay off your loan, you build up equity. Your mortgage payments will consist of paying off your loan and also interest. The bank won't give you the money for free, but good to know the interest you pay on your mortgage is tax deductible. So for this year, I think you get around, Robin knows better than me, but around 37% back of the interest payments.
Yeah, correct. Roundabout part of the interest and then 37%. That's correct.
Yeah.
Well done.
And then for those of you, or probably all of you are renting at the moment, and you might have noticed that the rents are extremely high. I already mentioned in the beginning, the buying market is competitive, but what if I see what people are paying for their rental properties, it's insane if you ask me. And it's expected that this will only rise further. And there's no tax benefits. And also, of course, you don't build up any equity. Then we have an example. Robin, will you explain this?
Yeah, so renting versus buying. Now, there's an overview. This is an example here with the situation where you purchase a property for 525,000 euros, or you rent a property in kind of the same area, same square meters, same finish pretty much to the property, and then you rent it for 2,500 euros. So then you want to know, what is the difference? When does it make more sense to rent or to buy a property? Now, in this situation, we used an interest rate of 4%. I know they're a bit higher right now, but just to give you some indication, and a duration of your mortgage of 30 years. So it means that this is an annuity mortgage. It does make a difference, Steph. Thank you for the question. Steph's question was if it makes a difference how you repay your mortgage. It does. This is based on a level monthly payment, so you pay exactly the same amount every month. And that's kind of the most stable one, and that's also where you have more flexibility. We can dive into that later. Again, back to this, interest rate 4%, duration 30 years, and with that your monthly payments are approximately 2,363, so 2,363 as you see here. But then if you consider the monthly payments of your mortgage, what it actually is, it consists of repayment and interest that you pay. Now, the repayment that you do on the house, that is something that when you sell the house, you get that money back, right? If you buy a house for 525, you repay to 500,000 euros and you sell it for 525, you get that money that you repaid, you get it back on your bank account. So that's kind of saving. So what you can really focus on when it comes to the comparison, renting versus buying, and what is money down the drain, basically. So when you really lose the money, renting, you don't get anything back. And with the interest, you don't necessarily get anything back. This is not considering the tax benefit that you have. So the situation is even better, but it is without considering that. So then basically the interest rate in the first month is 1,650 euros. So you lose 1,615 euros, 50 euros, as opposed to the 2,500 euros renting that you do. So that's the comparison that you can make. But then you also know that you have to do an investment when you buy a property, as Rick already mentioned. And when you buy a house for 525,000 euros, it kind of depends on your specific situation, but on average, your purchase and financing costs are around 18 to 20,000 euros. So then you want to know, okay, when does it really make sense to buy a property rather than keep renting? The break-even point is 22 months, give or take. So let's say 2 years. Does it then automatically make more sense to buy a house if you stay for at least for 2 years, because then you earn back the investment that you did? Sure, but I'd say look at the term of 2 to maybe 4 years. If that's kind of the range that you're looking for, then it really starts making sense to consider buying rather than renting. Again, is that automatically the case for everybody? No. Always have your specific situation checked. Don't just fly blindly on what other people do, but really focus on your financial situation, what makes sense for you in the longer term and the shorter term as well, of course. Do you have sufficient savings with the possibilities that you have right now? Can you buy the house that you actually want to live in for the longer term? All of that. So that's basically when it comes to earning that back. And then if we go to the next slide, you can see what happens after about 5 years. So then
195 instead of 525, but the principle is the same, I think.
Oh yeah, fair enough. Thanks. 495. Sorry. Let's say it wasn't a bit for 525. No, but it's if you can see here what the comparison is after 5 years. So that's kind of on average how long somebody stays in their first property, somewhere between the 4 and 6 years. So then, after 5 years, when you buy a house, the total monthly payments that you did are 141,000 euros. That's quite a bit, of course, when you consider it. But it's very good to keep in mind, of that 141,000 euros, you almost paid 50,000 euros in repayment of your mortgage. That's equity. So the equity that you earn, that you save up, is about 50,000 euros. So essentially, the cost that you have in rental payments is about 90,000 euros. Still a lot of money, but you also have a tax benefit. So it's in the end about 60,000 euros that you actually paid rather than the renting. Now it states 180,000 euros here. It should actually be approximately 150,000 euros. But then still, if you compare the 150,000 euros to the 90,000 euros interest payments that you paid, it makes significantly more sense to buy a property rather than to rent a property. When you consider staying in a property for about 4 or 5 years, then this is the yield that you make. So this is the return on your investment. Now, again, it's important to consider what your personal situation is, but we didn't include the tax benefit that you have, but we also didn't include any rent increase, because that's also what is expected, right? That the rents keep on increasing. When you buy a house, your monthly payments, as long as your interest stays the same, then you have exactly the same monthly payment as well.
Yeah.
So what is good to know, I see a question from Eileen coming in, if we can go back a bit. What is good to know is this presentation will be shared later on as well, and we can always discuss questions after this as well. So to keep things going, if you have questions, you can always ask them during the Q&A, and you'll be able to check this overview and the presentation later as well.
Definitely. Yeah, and you mentioned that the rent's increasing, but we also did not include an increase in terms of value, right? At the moment, prices are a little bit fluctuating, like increasing, decreasing a little bit. We'll talk about it in a bit. But I think, if I'm not mistaken, as of World War II, I think real estate increased by an average of 5% per year.
Yeah.
So yeah, indeed, if you're planning to stay for the long term, it's definitely better decision to.
It's good you mentioned that, and to add to that, and then you can take it back over, Rick. But it's what I just want to mention is that you hear so many different stories about what interest rates are doing, that interest rates spike, and that's not really the case, because we can see a gradual decrease actually when you look at the interest rates. Also, when it comes to values of property, and this is where Rick and his team are significantly better than I am, of course, but you hear a lot of kind of horror stories. So values will decrease in 5 years. There will be a 10% decrease. There's not necessarily in my mind, at least, any indication that that happens. But if you read something like that and it kind of spooks you, always feel free to check in with us, because we can debunk anything that needs to debunk or confirm something that can be confirmed, but then also nuance the story. So to make sure that what you read, our colleagues, by all means, check it with us as well, because we can show you what the actual situation is and give you some insight there. So that being said, Rick, take it over.
Thank you. Yeah, we already started talking about the market. Maybe it's good to know what caused the prices to increase. So I already mentioned there's some fiscal benefits, and the first one is the transfer tax exemption, right? So this refers to the transfer tax if you're able to make use of it. So below the age of 35, your first property and the purchase price has to be below 440,000 euros. Next year, this is even 510,000 euros. So even more people are able to make use of that. The interest rebate, I also mentioned it. The interest that you pay on the mortgage is tax deductible. No capital gains. So a lot of people make or made nice profits on their properties. And in the Netherlands, no taxes have to be paid over the profit that you make. Tax-free parent donation. In Dutch, we have a word called jubelton. So I think last year, people or parents were able to donate around 100,000 euros to their children if they were going to buy a property. I'm saying Dutch people, or basically anyone that is paying taxes in the Netherlands. They lowered it to around 30K for this year, and it says ending because as of next year, this is no longer applicable. The low interest rates, right? I think most of you know that the interest rates around 2 years were like extremely low. I would say almost for free. But of course, yeah, but if money is so cheap, a lot of people want to borrow. The high rents, there they are. The rents are super high in the Netherlands. So then, of course, people will start looking for alternatives. Well, what is the alternative of renting? Basically, to buy. And then maybe the most important factor in the increases is the lack of supply. So at the moment, I think we have around a shortage of 300,000 houses in the Netherlands. And yeah, prices, how prices are defined, it's just basic economics, right? Supply and demand. There's just such a big demand for properties that prices skyrocketed. If we look at the current market, so the interest rates went up. If I'm not mistaken, they're around 4.5% now. Which is definitely a big increase compared to 2 years ago. But if we look at it from a historical perspective, it's not even that high. I remember talking to my parents. I think back in the days, interest rates were around 8-9%. And then they said, yeah, if you can fix the rate for 4.5%, fix it for as long as you can, because it will never get lower. We all know what happened, but it's definitely not a high rate if you look at it from a historical perspective. In general, there's more listings than a few years ago. So that is for you as potential buyers, definitely a positive thing, I would say. So more properties to choose from, which also results in less overbidding. And with this one, I have to be careful because it really depends on the property, on the location, but it's not as crazy as before. And the overbidding, we will see in a bit what is actually overbidding. But the most important thing, again, is that there's still a lack of supply, right? So prices decreased a little bit as of last summer. And that was mainly because the interest rate went up, and it went up quite fast. So people were like, okay, it can't continue like this. So something needs to happen. But now, since the interest rate's more or less stabilized, there's still, again, a lot of people looking for a property, right? And I mentioned we have this shortage of 300,000 houses in the Netherlands. Our government is trying to do as much as they can, do as much as they can. But with everything in the world right now, raw materials are super expensive. It's hard to find good labor, so projects get delayed all the time. They don't get the permits to build. So I don't think that they're able to solve this issue anytime soon. And that is also the reason, as Robin mentioned, why we don't expect like a major decrease in terms of value. So for you guys, if you think, is it still a good time to buy? I don't have a glazen ball. I can't predict the future. If I could, I think I would have had a different job. But I don't foresee a major decrease anytime soon. Then the topic of savings also really important. What do you actually need in order to be able to buy a property? We have a nice overview. We already saw an example previously. And the first one, again, is the transfer tax. Typically, this is 2%, right? Well, we already talked about the exemption. One thing I want to add, let's say you're buying with a partner for 400,000 euros. You are 33, but your partner is 36. If you buy the property together, that means one of you has to pay the transfer tax. So one of you has to pay 2% over half, let's say over 200,000 euros. So basically you end up paying 1% instead of 2, right? So it doesn't mean that if if your partner can't make use of it, that you can't as well. It really depends on the person. In order to make everything official, right, we need to visit the notary on the transfer date, and you need to sign 2 deeds if you finance with the mortgage, the mortgage deed and the transfer deed. And you see on the right column, tax deductible. Good to know. Everything that is mortgage related in the buying process is tax deductible. So yeah, mortgage deed speaks for itself. Yes, of course, it's tax deductible. Depending on your notary, this will cost you between 700 and 1300 euros. The same for the transfer deed. Then, in order to arrange a mortgage, you can reach out to your bank or to a mortgage advisor, just like Robin. I would always advise to talk to an independent mortgage advisor. Robin already explained, but they have the option to secure a mortgage from 30 different banks. Every bank has its own policy. So one bank is a bit more strict on ground lease, on self-employed people. So in the end, the mortgage they will secure for you, I think better suits your profile. And the rates differ per week, right? So it could be that this week ABN is the cheapest, but next week it's ING. Maybe the mortgage advisor is a little bit more expensive, but you will definitely earn it back. EHN, so our fee is between 0.75 and 1% over the appraisal value. I will explain this more into detail at the end. The appraiser, also a really important party in the buying process. So in order to apply for a mortgage, the bank wants to know the market value, which is officially defined by the appraiser, between 700 and 900 euros, also tax deductible. Technical inspector, another important party in the buying process, typically 465 euros. The interpreter, so for those of you, which probably most of you are, if you don't speak Dutch, legally it's mandatory to have an interpreter present at the notary to translate the deeds for you, so you know exactly what you sign up for. The bank guarantee, so one of the clauses in the purchase contract states that you need to provide a deposit equal to 10% of the purchase price to make sure you fulfill your obligations from the purchase contract. Well, of course, not everyone has 10% as a deposit, so then you can also arrange a bank guarantee, which will typically cost around 250 euros. And then last but not least, NHG. Robin mentioned it, 0.6% over the total mortgage amount, but you will easily earn it back since you have a lower interest rate. And those, we call them the closing fees. And the closing fees, you do need to pay from your own savings, right? So it depends on your personal situation, like whether you have to pay transfer tax or not, whether you are able to make use of NHG, all those kind of things. Yeah, define or make sure or what you actually have to pay. So it's difficult to say like a fixed amount. So good to check this. Then 3 tips to win the current market. And then there it is, value, value, value. I mentioned it before, maybe the most important factor in the buying process. And I think I can explain you best by giving you an example. So we have a property with an asking price 395,000 euros. We like it, we want to make an offer. So what we do is we make a price research. And with a price research, we find out that the market value is actually 415,000 euros. You really like the property, so in order to make a winning offer, you offered 435,000 euros. What people will say is that you overbid by 40K, more or less 10%. What we say, no, that's not the case. The value is 415. So that is also what you can finance with your mortgage, right? You offer 20K over the market value. So the actual overbid is 4.8% and not around the 10%, right? Very important to keep that in mind. Because let's say we have the same property, but a different strategy from the selling agent or a different selling agent. And now they put the asking price on 375,000 euros. As mentioned, it's the same property, so also the market value is the same. And the purchase price is also the same. Again, people will tell you overbid by 16%, 60K. No, do we say 20K is the overbid, so 4.8%. Well, it can also be the other way around, right? So that the asking price is 450,000 euros. Again, we do our research, and what we find out is that the value is actually lower than the asking price. So the market value is 425. If you were to offer 450,000 euros because you did not want to overbid or you don't have the savings, well, actually the overbid is 5.5%, right? 25K over the value. So in the ideal situation, the asking price 450, we do our price research, we find out market value is 425, and that is also what we offer because that is what we can finance. So people will tell you again, you offered 5.5 or 5.5% less. Well, actually, you bought on the market value, no savings needed, and no issues with the financing. The difficulty about the current market is that there's no general rule like you have to overbid by 10% or market value or asking price is market value. It really depends on the strategy of the selling agent. So it's crucial to have an understanding about the value before submitting any offers. Talking about offers, what is a winning offer? A winning offer is a good price, but not per se the highest price. Because if we take the last example I just gave, where you offered 450, but the value is, let's say, 425, and you need 100% financing, and then the sellers might think, hey, probably they won't get 100% financing. So we'll go with another one. And that is also related to the next one, right? Offer security to the seller. If you maybe have savings, it can be really helpful to mention that, right? Or if you don't need 100% financing. But what also helps, if you work with an advisor like Robin, maybe you can ask for a statement which about your financial situation, which you can attach to the offer, right? Security is really, really important to the seller. The least amount of hassle. There's a few things you can think of. For example, maybe the sellers, they move back to their home country and they want to sell the furniture. Well, if you like the furniture, it can be interested for you to take it over, right? They don't have to sell everything separately. But what you can also think of is if the sellers bought a new build property that is only finished in, I don't know, 6-7 months, yeah, be a little bit flexible with the transfer date. I have to meet the first person that really likes moving. So yeah, don't make them move 3 times in 6 months, right? It's also difficult to find short-term accommodations. So be flexible with that. And then the last one is offer personal touch. So selling a property can be quite an emotional process, probably, or could be that memories are made in a house or apartment, maybe children were born or whatsoever. So it can be difficult for people to leave their home. And therefore it could be nice to write something about yourself, why you like the property, who you are, so people have a bit of an understanding of the next owners. I wouldn't say it's the most important thing, but if you offer, like, if you have like an equal offer, and you can explain them exactly why you like the property, it will definitely make a difference. Number 3 is to do your due diligence. And in order to do so, we have 2 parties. We already saw them in the overview, the technical inspector and the appraiser. My question to you guys is, do you book them before or after your offer is accepted? Let me just show you the answer. Indeed, it's after your offer is accepted, because typically you have around 10 days between getting your offer accepted and signing the purchase contract. And within those 10 days, the inspector and the appraiser will come and inspect the property. Why is it important to do that as soon as possible? I mentioned the bank will only give you 100% of the market value, which is defined by the appraiser. So the sooner you know the value, the sooner you know how much you can actually finance and whether it's a good deal for you. Well, the technical inspector, of course, we, for example, will check the property during the viewing, we will check the documents, but we can't see everything at those, from the documents and the viewing. So could be that we missed on a leakage simply because we couldn't see. Then this is the moment to renegotiate with the selling party, right? You can either say, okay, we'll lower the purchase price, or we add a clause to the contract that you have to fix the leakage. But therefore, it's really important that you have the results before signing the contract. Good to know, even after you've signed the purchase contract, you have a cooling off period of 3 days in which you can dissolve the contract without paying a penalty. But if you would like to pull out after those 3 days, you need to pay a penalty equal to 10% of the purchase price. So again, really important to have the final results, I would say, ideally before the purchase contract is signed, otherwise at least within the cooling off period. All right, that was a lot of info, I think. What I'm going to do is I'm just going to recap everything by going over the timeline and how we, Robin and me, can support you in the process. So some people wait with reaching out to the mortgage advisor after the offer is accepted, but I would say the first thing you would have to do is to consult with Robin to have a clear understanding about your finances, right? You do want to know how much you're able to borrow, but also how much you're willing to spend on the mortgage. Life's already quite expensive nowadays. Every time I go out to a restaurant or even the supermarket, I'm like, wow, is it that expensive? So you might not want to spend every single penny on your mortgage. But once that's clear, you can start looking for properties. Probably you guys know Funda. It's the main platform. Basically, all the properties are listed on there. Well, let's say you found something interesting, then you can share the property with us and we can help you with booking the viewing and attend the viewing with you. And during the viewing, it's really important to ask some critical questions to the selling agent, like what are the expectations of the sellers? Do you already have some offers in? What is the bidding procedure? So will there be a deadline or not? But of course, also to check the conditions of the property, right? In what state is it? However, the most important thing I always say is that you need to feel at home. With housing, it's always a feeling. What I see with most of my clients, often within a few minutes, they know whether it's a yes or a no. But if it's a yes, you come back to us because the feeling itself is not enough, right? So then we will start doing our homework. And the first thing we'll do is a price research. With the price research, we'll look for similar properties in the same building, street, or area. And based on that, we can see what the market value is. And that is the same thing as an appraiser would do. Well, the importance I've just explained, right? Because the bank, once more, the bank will only give you 100% of the market value as a mortgage. And then the other research we'll do is a property document review. And then we'll basically check any documents related to the property. Especially with apartments, you have documents from the homeowners association. So what we check is if it's a healthy association. So what maintenance has been done, what maintenance is planned, do they have enough savings in order to cover those costs, or is expected that you need to pay additional fees to maintain the building? But also from a construction perspective. So are there any issues with moisture, with foundations, anything you can think of? And then last but not least, also from a legal perspective. As mentioned in the beginning, every property has its own rules, regulations, and restrictions, and we will inform you about those as well. Then we'll discuss the two researches, and based on that, we can draft the offer. We will help you with the negotiations, we'll submit the offer for you, and then hopefully we get the offer accepted. And then once the offer is accepted, as just explained, we'll book the appraiser and technical inspector. We'll review the results. If needed, we'll renegotiate with the selling party. If not, we can sign the purchase contract. And once you've signed the purchase contract, basically that is the last document, probably the last document you need to finalize your mortgage application or start your mortgage application. It depends a bit on your personal situation, on your advisor. Typically, this will take about 4 weeks. I think Robin often is a little bit faster. So 2 weeks, yeah.
Yeah. If it's not too complicated of a situation, currently it kind of depends on what bank we go with, but there's the banks that have good interest rates, good conditions, and just have their things together and their processes. We can secure a mortgage if it's not too complicated of a situation. Of course, as mentioned, it's about 3 days even. But to manage your expectations, let's say a week, maybe 2. If there's a bit more to it, if you buy a house more expensive, then maybe 3 weeks, but it doesn't have to take longer than that, really. It's a waste of your time, really.
Another advantage is that if you reach out to your bank, probably it will take a bit longer than if you work with an advisor like Robin. But once your mortgage has been approved, you're almost there. The final thing left to do is to go to the notary and make it official. So on the transfer date, you will sign the deeds, you get the keys. But before you go to the notary, we go to the property once more to do a final inspection to see if everything is in the same condition as before. I always give the example, maybe the sellers, they broke something with their goodbye party or with moving out. Well, that is something you did not sign up for when you signed the purchase contract some weeks ago. So then we inform the notary about this, and they will keep a certain amount in their account in order to fix it. But if all good, you can sign the deeds and you are the proud owner of your first property in the Netherlands. Then we have some frequently asked questions. And the first one is for you, Robin.
Yes. Can I get a mortgage with a temporary contract or as a freelancer? Well, basically, the easy and straight to the point answer is yes. With both situations, it doesn't have to be any issue, really. But let me explain a bit more thoroughly. Let's start with the temporary contract. It's very common that when you start at a company, that you first get a temporary contract, maybe for a year or a couple of months. Basically, from the first day that you start at your employer, you could already secure a mortgage. You don't have to have 3 or 6 salary slips. That's not necessary. As long as you crossed your probation period, then you can secure a mortgage. Sometimes even during, but that's another situation. So temporary contract. The bank wants to know for sure that you have a durable, longer lasting income. If you have a temporary contract, that's not really the case. So how do you fix that? If you do a mortgage application, you always need something called an employer statement. This is a standardized form that the employer fills out to confirm your employment, income, and personal information. There's a nifty little box they can tick, and that is a declaration of intent or an employment continuation statement, as it's called on the overview. Basically, what they say with this is that they have the intention to keep you on indefinitely after this contract ends. This temporary contract. So they give you the intention. Now, I cannot stress this enough that it's an intention. This document that they sign is not legally binding. This is also the reason why pretty much all employers will confirm, well, yes, sure, you need a mortgage and you need this employer statement with the declaration of intent. Yes, they will tick that box as well. We will discuss this with you if you also feel that this is safe to do, because when you have this declaration of intent from your employer, so they confirm, yes, we intend to keep you on indefinitely, we want to be sure that you also expect that your income is indeed longer lasting, so we don't put you in financial issues if you do not continue working there. So that being said, declaration of intent fixes all the things which might be an issue with a temporary contract. Therefore, yes, it's possible with a temporary contract. Now, a freelancer, that's a bit different. Freelancer, entrepreneur, business owner, basically are all considered pretty much the same thing. Basically, you're not employed, but you're self-employed. Now, what banks prefer is that you have 3 years of history in the Netherlands of your company. Why 3 years? Is because then you can show that you kind of have history and you know your way around on the Dutch market and you know how everything works. But 1 year, being 12 months, is already sufficient. So if you're 12 months, your history of your company is 12 months in the Netherlands, being registered at the Dutch Chamber of Commerce, then you can already secure a mortgage. The income that we can use is a bit lower than the total amount, 2 years, that increases a bit. So you can borrow more if you have 2 years of history. And 3 years, that is the best situation, of course. It's always the average of your income in the Netherlands. If you have the specific situation, which we come across quite frequently, that you might have moved your company from abroad to the Netherlands, in some situations, we can even use your history of abroad in the mortgage calculations here in the Netherlands. But you always need at least 12 months of history. But yes, as a freelancer, it's definitely very much possible to do that. If you're planning to do this, even if you just started as a freelancer, maybe already check in with us to make sure that you know what kind of choices you make. Because if you are a freelancer or a business owner, sometimes there are tax considered choices to make. So maybe to keep your profit lower, to pay less taxes. If you keep your profit lower administratively, then that can have an effect on your mortgage later on. Because then if you have a lower profit, then it's considered lower income. Therefore, your mortgage later on might be lower, even though it's just an administrative trick to prevent paying too much taxes. So if you're planning to do that, start your own business and later buy a house, maybe check in already to make sure that the future choices that you make are in line with the plans that you have. And again, summarizing short, can you? Yes, that's it.
Thank you. Then the next question. What happens if your parents, if you want to, sorry, if not parents, what happens if you want to leave the country after several years? Basically, you have two options. And the first one, I think it was mentioned by Robin as well, is that you can sell your property at any time without paying a penalty, right? The easiest way, I would say, the only thing you would have to pay for is a selling agent. Well, the cost of a selling agent, I think, are between 1% and 2%. But then hopefully you made a profit on your property, and you can use the money for other things. But what you can also do is to keep your property and rent it out. Good to know is that you do need permission from the bank, or basically to refinance your mortgage, right? Because with a residential mortgage, the bank probably will not give you the permission. Robin, can you explain a bit more about the refinancing of a mortgage?
Yeah, sure. So you pretty much covered the basics already. So when you have a residential mortgage, meaning you have a mortgage on a property that you are the resident of, you live in there, then you are not allowed to rent out your entire house. You can rent out a room. That's something, I think it's the next question, so we'll leave it to there. But you can, but if you want to rent out your entire house, the bank doesn't allow this. Only when, for instance, you live and work in the Netherlands and your employer states, well, hey, it's been fun having you here, but we have this office in Singapore and we need somebody there for the next 2 years. And so it has to be a very specific term saying, well, yes, you are going to Singapore from February 2024 until February 2026. Then you'll come back. You have the same income at least, and you'll be reinstated here at your job in the Netherlands. In that situation, some banks allow you to temporarily rent out your house. This is the only specific situation that this might be an option. I know there's something called a vacancy law that really doesn't apply right now, because that only applies if you really cannot sell your house. And to be honest, right now, if you put your house on the market, you do this, and maybe this doesn't take this, but maybe a week or a month, or maybe 1.5, depending on your property and what you want for it, of course, but you can sell the house. So the vacancy law doesn't apply. So therefore, you have to refinance your property from a residential mortgage into an investment mortgage. That is a bit of a different mortgage in the sense of that it's not based on your income primarily, but more on the property itself. So that is the focus point. What is the value of the property in rented state? It's usually a bit lower than open market, let's say. But also, what is the rental income? Also very important, as of next year, some changes will be made in the law and legislation when it comes to renting out your house, and the difference between social housing, so there's rent control, and also open commercial renting, so you can charge anything you want really. So it's good to be well prepared to do that. It's definitely a possibility. What is good to know, a common misconception is transfer tax, because as Rick already mentioned, if you buy an investment mortgage, then you pay about 10.4% transfer tax, but that doesn't apply if you refinance, because the transfer tax is about the transfer of the ownership. And if you own the house, you already own the house. If you convert the mortgage, it's not a transfer of ownership, So therefore, you don't have to pay that transfer tax. So then in that sense, could be very interesting that if you move to your new house and you want to keep your current one to rent out, could be very interesting, but make sure you know what to do and what your possibilities are. So yeah, that's about it. It's based on the rental income and the future perspective of that investment.
Yeah, and then there's one thing I would like to add is that since we have quite a competitive housing market and it was quite difficult for starters to buy a property, a lot of municipalities introduce like a self-occupancy obligation. So then it depends on the city. But for example, in Amsterdam, it's not possible to rent out your property for at least 4 years if your property is below a certain value. For instance, I think it's 530. In Rotterdam, this is different. It's only applicable in certain areas of the city. So please check on the website of your municipality what rules apply, but that is also something to keep in mind. You almost wanted to
Yes.
to the answer. But Robin, can I rent out my house or a room?
Yes, you can, but again, you have to know your the rulings there. Let's first focus on rent out a house. Yes, you can, but the mortgage has to be adjusted. And indeed, as Rick already very rightfully mentioned just now, there are rules when it comes to, depending on what city you live in, and also when you bought the house. So in 2021, new laws came into place. So indeed, when you bought the house as of April 2021, you cannot automatically rent out your house. You have to live in it for 4 years at least if you buy it below a certain price point. And that's depending on the city or the area that you live. Indeed, somewhere can range from 350 to about 600,000 euros even, depending on the city. So that's one thing to consider. But for the rest, it is possible to rent out your entire house. When it comes to a room, that's a bit different. So essentially, when you would call a bank right now and say, well, hey, I'm closing a mortgage with you guys and I want to rent out one room, then they will get all flustered and say, no, please don't do this. There's a reason for that. Because you can, but you have to know what you have to do and also how to, because why they say you cannot do it is because there's a financial risk to you. If there's a financial risk to you, there's a financial risk to the bank. Now, what that is the tenant rights. So if a tenant lives in the property for, I think it's 2 years, guys, correct me if I'm, it's 2 years. If you live in a property for 2 years, then you have tenant rights, which basically means nobody can just kick you out of the property. So therefore, if somebody lives in your property for 2 years and you say, okay, now I want to sell the property, they will just say, well, okay, no, I'm not stepping foot out of this property. I'm living here now, and they have the right to do that. So if you then have to sell the house, you have to sell the house only to investors as a property being rented out, or somebody has to want to buy a house with a roommate already in there. That's really tricky to sell. So therefore, the property value decreases. That is a financial risk to you, therefore a financial risk to the bank. How to mitigate this is you can, for instance, do something like eviction clause in your contract that you say, okay, sure, you can live in the property, or you do a temporary housing, or you say, okay, sure, if I sell the house, you have 6 months to find a new property, for instance, or you can maybe sweeten the deal and give them the first option to buy your property from you. Basically, they have the first option to put in an offer. So that's what the banks would be scared about when you rent out a room. So you can, but make sure that you covered all your financial risk bases. The rental income when renting out your house is not taxed. When you rent out your room over a certain amount, I think it's 3,000 euros per year, then it is taxed as income. So those are a couple of things to consider. So yes, definitely possibilities. And again, please do be well informed before you make any choices there.
Thank you. Then the next question. What is the 10% deposit I need to complete? I think I already explained it a little bit, but one of the articles in the purchase contract states that you do need to provide a deposit equal to 10% of the purchase price in order to make sure you fulfill your obligations from the contract. Well, as a buyer, what is your obligation? Basically, it's to pay. And as I mentioned, of course, not everyone has a 10% deposit in terms of savings. So what you can do, you can reach out to your mortgage advisor, and what they will do is arrange a bank guarantee. The costs are, I think, typically around €250, as mentioned before, somewhat in that range. And then you don't have to actually transfer this 10%. It is mandatory, so you will see it in every purchase contract. It's not that you can leave it out or increase it, like make it 20%. No, always 10%. I think this one is not correct.
It showed where when you pay this 10%.
Yeah, the 10%, that is after you sign the contract, right? So between signing the purchase contract and the meeting at the notary, most of the times it's 1 week after your financial clause expired. So you secured the mortgage, the bank guarantee is arranged, all the documents are shared with the notary. One thing I forgot to explain, and I will do that now, is the statement of completion. So around a week before the transfer, you will receive a statement of completion from the notary. And basically that's an invoice with all the costs you have to pay. So maybe Robin will share his invoice to the notary. We will share our invoice to the notary. The notary, you also have to pay for the notary. So you will transfer the full amount a few days before the transfer, and then the notary will make sure that everyone gets their part. So good to keep that in mind. Talking about the invoices and fees, what are your fees? As mentioned in the beginning, our fees are either 0.75% of the appraisal value or 1%. With the smart package, we're more like an online consult, I would say. So people will book and attend the viewings yourself. And the moment you decide you want to submit an offer, we step in. So then we'll help you with the price research, property document review, the offer submission, negotiations, arranging all the contracts to make sure all the clauses are correct, you're protected, and translate, since unfortunately the purchase contract is in Dutch. We'll help you with booking the third parties and some transfer support. With the complete package, we are physically there for you. So then we'll book the viewings for you. We'll join you to the viewings. We'll join you to the technical inspection, final inspection, and to the notary. And for those of you that are interested in buying a new build, that process is a little bit different, but we can also help you with that. And then our fee is 3,450. So yeah, enough options, I would say. Robin?
So we also have a fee. Our fee, we work on a fixed fee. Doesn't really matter how high the mortgage is to a certain extent. When it comes to residential mortgages, so when you buy your first home, the fixed fee is €2,999. When you look all the way to the right, you can see above 1 million. Basically, banks are more, the assessment will be significantly more thorough, takes a bit more time. So our fee is a bit higher when you go for a mortgage of a property valued higher than 1 million. Now, what you get for this is across the board is basically the same. We always start, and as Rick already mentioned, when you look at the timeline, usually you start with understanding your finances, because then you know what you can do, right? We always start with the introductory call, of course, always free of charge, just to kind of get to know each other and understand your situation. We can do basic checks already, eligibility check of what your plans are, and to see if that's possible. Basic. Now, the next step would be a financial analysis. And this is where we really dive into, we take a deep dive into your financial situation based on the goals that you have. And really what that is we do the same assessment as that banks do already. Now, banks only do this when you actually start a mortgage application, and we do this now at the start of the whole process, so you know exactly what your possibilities are. That's not something that we just do once. This is something that's a continuous process. Every time that something changes, we'll adjust the calculation so you always know exactly what you're up against and what your possibilities are. Now, this financial analysis is something that we'll discuss with you in about a call of an hour. You're always welcome to our office, or we can do it through Zoom, Teams, or whatever you need, really. Now, it's something we'll discuss the scenarios. How long do you want to fix your interest rate for? What amount of savings do you want to input if necessary, or don't you want to input? We'll discuss your maximum mortgage. Not necessarily only based on what the banks allow or what the government allows, because that's not really that interesting. It's more important to discuss what your maximum is or what your range is based on what you feel comfortable with spending per month, because that's actually what goes out of your bank account. I don't want to max out there or go over a certain limit that you don't that you're not comfortable with, because basically what that would mean, you might have a very, very nice house, but 3 months down the line you give me a call saying, hey Robin, why can I not go to dinner anymore? And I don't want to do that to you. I want to be sure that it's that it makes sense for the future as well. So that's what we'll all discuss in the first call. It sounds like a lot, will be a lot of information there, but it's not something we just once, as mentioned. Every time that you have questions, you can always reach out to us. We'll recalculate all the based on your preferences every time, every other property that you like. And by all means, if you find a property, send it to these guys, of course, but also to me, because the different specifications of the property can change your mortgage as well. Not only the mortgage capacity that you have, so what you can get, but also what bank to go with, right? And banks, as Rick already mentioned, tend to change their interest rates every couple of weeks. So 1 week, Bank A might be the best, and 2 weeks later, Bank B might be significantly better, or they change their conditions, all of that. That's all something we nerd out about really a bit, so we always know exactly what the possibilities are, so we can give you a thorough insight of what your options are. Now, that's what, as mentioned at the start as well, that applies to residential mortgage, whether you buy your first, second, third, or fourth, or 23rd house, but also when it comes to investment mortgages or increasing or changing your mortgage, all of that, everything you need will help you with. We work with a small down payment of 299 euros at the very start to cover the hours that we put in. And only at the very end, only when you actually have the keys of your new house or your mortgage is arranged to whatever change has to be made, only then the remaining fee is charged. And I don't want to rub it in, but the Mr. Mortgage fees are tax deductible. So you get back about 37%. Why I said don't rub it in. Unfortunately, as of yet, that doesn't apply for real estate agents yet, but let's hope the tax authorities make up their minds to do that. But that's basically what it is. 299 down payment, the rest of the fee at the very end, and our fee is tax deductible. That's it.
All right, thank you. And then we can move on to the Q&A. I see Joanna has been busy with all the questions you had.
Hi, I am indeed. Yeah, thank you for the webinar, both of you. It's very clarifying. I have answered some questions already in the Q&A in the chat as well. There is still a few. Abhilash said, good webinar, so thank you very much. We appreciate that. Let me ask the first question from Johanna. I hope I'm saying your name correct. If I'm not, I already apologize for it. Do I have to be residing in the Netherlands for a minimum amount of time to be able to apply for the mortgage?
No. Not well. It kind of depends on the banks, but there are sufficient banks that already allow you to get a mortgage. The most important thing is have a BSN, Dutch Social Security number, and have a source of income. If that's the case, you could even already, while living abroad, already buy the house as long as you move into the property within 3 to 6 months. So that's possible. So definitely it is possible that when you just step foot in the Netherlands, you have a job, BSN, or source of income, BSN, then you're good to go. Yeah.
Thank you. Another question. So can people buy a house from abroad before they land here?
From abroad, did you say?
Yes. Yeah. If before they arrived in the Netherlands.
Yeah. Like I just mentioned, yeah, basically that is possible. The thing is that the lenders or the banks that allow this are fewer. Not all banks do this. So it optimizes, and for one thing, you have to input more savings. So usually you can finance up to the full value of your property if you're income allows it, of course. So that's the usual situation. If you want to buy from abroad, then you have to input at least 20% of the purchase price or the value of the property. So that is something to consider. So it is possible. It increases your range and your spectrum of banks and input of personal savings when you are already registered here. But yes, it is possible.
There you go. Thank you. I have a question that I believe it was when you were explaining about the mortgage types and the mortgage rebate. So I believe it was that from that part. So interest increment will also be there, right? So we are only discussing about fixed interest rates. So I think the question is about if the interest rates will increase or in any time during your mortgage process, or we are only discussing about fixed interest rates.
Yeah, so if I understand correctly, so you have different ways to secure your interest rate. So you can have a variable rate or a fixed interest rate. If your interest rate is fixed, then your monthly payments do not change. But do you understand the question correctly?
I think so. I think it was about like when you were talking about the rebate of the interest rates. The interest rates will increase also, right? So I think they didn't understand that they can't actually fix the interest rate. They won't increase. Yeah,
I understand. Yeah, so you can fix your interest rate for whatever term you like. It was very basic to do it for 10 years. Now, the expectation is that the interest rate might decrease very gradually, by the way. It won't drop all of a sudden, but there's an expectation it might decrease over the next period of time, being 4, 5, 6 years. So we can see that shorter term interest fixed periods are taking over now more. So to have your interest fixed for, let's say, 5 years, for instance, then for that term, your interest rate will not change. And then if you have a longer interest fixed period, your interest rate will be higher usually. So that's a combination to make. So higher interest rate means that you can borrow less, but your interest rate is fixed for that term. And then you can also go for a variable rate, which it means it can change every month. It really depends on what your personal preferences are. And also what is important, so the choice of your interest fixed period can make a difference in your maximum mortgage capacity. So that's good to keep in mind when you make that choice. It's definitely something of the scenarios that we'll walk you through. And indeed, the interest rate, therefore the interest fixed period, interest rate also has an effect on how much interest rate or tax benefit you'll have. But that's all something we'll meticulously explain and give you insight in when we run the calculations. I hope that answers the question. If not, by all means,
I think so.
In the chat what you need.
I think so. I think it was quite clear. And I did anyway copy and paste the website from Mr. Mortgage in the chat. So also in the Q&A. So if you have any specific questions and that's kind of specific, please make an appointment. They will be happy to answer that for you. I have one final question from Eileen. I hope I'm saying correct. So we do not need a permit residency in order to buy a house.
Yes, you would. Very good question. It kind of depends on from what country your passport is or what nationality you have. If you are from an EU country, then you don't need a residency permit. You're free to do whatever you like. If it's outside of the EU, you do need a residency permit. And the most commonly one we can see is from a highly skilled migrant, for instance. If you have another one, by all means, as Divana already mentioned, schedule a call with us. The introductory call is about 10-15 minutes, always free of any obligation or cost. If you just want to check in, well, hey, is this possible? We can just walk you through what the possibilities are. But yes, you need a residency permit or an EU passport, Dutch social security number, and a contract of employment or a source of income, and then you can secure a mortgage.
In the meantime, one question came again about the fixed interest rate. So fixed interest rate means we have to agree for more rate?
If I understand correctly, so let me just explain how it is, because
exactly.
Maybe
yeah, I think this is easy. I think it will be easy like this. Yes.
So when you secure a mortgage, when you close a mortgage, when we do that for you, we'll discuss with you how long you want to fix your interest rate for. That means that your interest rate will not change for that specific term. For instance, 5 years. Your interest rate after those 5 years, then your contract with the bank ends. You repay your mortgage in 30 years, but for the 5 years you have a contract with the specific bank. After that 5 years ends, then the bank will send you a message saying, well, hey, it's been fun the last 5 years. Here's our offer for the new term. And you can just choose whatever you like. We don't know what that interest rate is going to be right now, of course, because unfortunately I have lost my crystal ball a long time ago. And as mentioned by Rick, we wouldn't sit here because if we knew, or maybe we would and we'd tell you, but we don't know. So after 5 years, your interest rate will be redetermined based on the interest rates that are valid at that time. Again, what those will be, we don't know. There's also no way to already say, okay, sure, I'll fix it for 5 years. And then after those 5 years, I'll have that interest rate. That is not possible. You only do it for the fixed term that you choose right now. After that, we have to see what happens.
Very clear. Thank you so much. I think that was it. That was all the questions. There were a few questions about how much money you need to buy a property in the Netherlands. I have answered you, all of you, on that one as well. Yeah, thank you very much, the both of you. And you guys receive the presentation, you will receive the recording, and at the end of the presentation, you're going to see QR codes and also websites where you can make appointments with Robin from Mr. Mortgage and also with our team, with Rick and myself for the intake. Yeah, if you need to go a little bit deeply on your own process, and that should be the case, I believe.
Exactly.
Yeah.
So, you can schedule an intake call with us via our website if you want to discuss your personal situation. Thank you all for joining. I hope you learned something today. Robin, thank you for joining.
Thanks for hosting both, and for being welcoming again. Yeah. And
of
thanks
course.
for everybody
Nice to see you again. Yes.
joining as well. All right, guys.
Yes.
Great afternoon.
Bye-bye.
Enjoy your lunch.
Bye-bye.